Hi, Nick Neal with New American Funding and Nick on Rates for Friday the 20th. I hope you are ready for a nice weekend. Looks like weather's going to be a little bit gray, but we're looking forward to a nice weekend with family activities that we got going on. This week, we're going to call it an ice cream week with Sebastian. You see, he's got ice cream here. CPI, PPI numbers, inflation, unemployment, everything over the past couple of weeks has been really good, and we've had a nice trend in the right direction with bonds and treasuries to be able to bring interest rates down. Not a lot, but at least trending in that direction. We still need some big moves to really see a reduction in interest rates, but all of our economic indexes have been good, and our employment and economic numbers have been good too. Negative for the employment and economic numbers, but good for bonds and rates coming down. And so the big thing that was coming up here, and let me talk about some economic stuff first, because that kind of leads into what happened with the Fed on Wednesday. Housing starts were way down, 9.8%, negative 9.8%, down from 1.35, an expected of 1.35 million, and we got 1.25 million, down from 1.39. So they were down quite a bit, 9.8% down. That's a big drop. They've been up 2%, I think, for the last month. But to see that, it kind of tells you that builders are looking ahead into the future, not expecting things to be great for the economy and for housing purchases. So we look towards builders as somebody who's really got a lot of money invested and time invested into their future endeavors with building new houses. And so they do a lot of effort to try and predict what's going to happen in the future and get an idea for where the economy and where the housing market's going. And then they set up buying lots and doing subdivisions and all the things that take 2, 3, 5 years into the future to come to fruition when they're going to sell. They're doing a lot of that effort based on what they see is happening in the economy. So to see housing starts way down, that's a sign that the builders are not expecting good things in the near future for the economy in the upcoming years. Retail sales, we had negative 0.9, expected a 0.5, negative 0.1 last month, so that's down quite a bit too. So that's another sign the economy is slowing. That was about it for this week with economic numbers, piggybacking on the positive economic numbers that we've had that have been good for interest rates over the past couple of weeks here. So everybody was waiting for Wednesday for the Fed to come out and for Powell to speak. People pretty much were sure that they weren't going to drop rates, and they didn't. But he did say, some of what was positive that he did say was that they're still expecting 2 rate drops in the future, and that was what we were all expecting. We wanted him to say good stuff to help improve rates because people were kind of waiting for that, or 2, we didn't want him to say negative stuff and cause rates to go the other direction, because he really can turn things depending on what he says. So his speech was pretty much flat. It really didn't do anything to the markets, and both the stock market, or both the bond market, treasuries, and mortgage-backed securities markets were pretty much flat after Wednesday, which was, I guess, better than going negative, but kind of a surprise. All he really talked about was tariffs and how that could cause an increase in inflation in the near future. They raised their inflation expectation from 2.5 to 3.1, which kind of goes against all the numbers that we've seen. We've been seeing lower numbers, so that was kind of odd that they would raise that. Did raise their expectation for unemployment could go from 4.2 up to 4.5. That was an increase from an expectation of 4.4. They downgraded their expectations for GDP to 1.4, down from 1.7. So they're seeing a slowing economy. They're seeing slowing job markets. But he's still blaming Trump for tariffs and the potential of how that's going to increase inflation. And I don't think that it's really going to be a long-term thing. Christopher Waller, who looks like he might be our next Fed chairman, crossing fingers, because what he says is pretty much in line with most of the rate advisors that I listen to. He seems like a really good guy. He's an economist. He's not, outside the field like Powell has been. And he's came out and kind of said things along the lines of what I've been saying, what my rate advisors have been saying, that treasuries is kind of a one-time thing. It's going to come and go. It's probably going to pass wayside. If they do come in and become part of the normal situation for economy, then they're going to have an effect in the beginning, but it's just going to flatten out. So it's not going to have this forward long-term effect like Powell seemed to talk about with inflation. So that was good to hear while they're talking about things that make more sense, and him probably one of the lead candidates for the next Fed chairman. That was good to hear, and I think that had a positive effect on the market that kind of outweighed anything that negative that Powell said. But hopefully we don't see any more negative speak from the Fed, and continue to see good numbers for inflation and treasuries. We have a nice downward trend going with treasuries that we've started here a while back with the CPI, PPI numbers, inflation numbers, and all of our economic news that we have. So that's continuing on nicely, and just kind of stayed flat the last day or two with Fed speak. And then on mortgage-backed securities, again, we've got a nice upward trend. We are coming into the middle of our Fibonacci line here. We've got these 4 sections, and these are areas of resistance that you can see from the past. Technical factors cause these to be places that we really have a hard time to get through, or get, they can be support to keep us from going down. Right now, we're right at the Fibonacci 50 line, which is a heavy line to get through. And so if we can break through that, there's a good chance we're going to continue on up over here. If we don't break through it, we could come back here, but at least we're out of the bottom range we've been in, and we've just been staying in this mid range for quite a bit here. So hopefully we'll continue to move up, and we can break through this and get on into better rates. Looking for good economic news to come out this week. Negative economic news, but good for interest rates and continued inflation numbers. We've got CPI, PPI numbers coming out here again soon too. So have a great weekend. Everything is still looking good for rates, and Powell really didn't do anything Wednesday to turn things the wrong direction. So aside from him saying that they're forward speaking when they're really not, they're just looking at past data. Yeah, we're just looking forward to maybe somebody like Whaler coming in as our next Fed chairman to be a little bit more active and really look at forward things and not cause issues like we've seen in the past. So have a great weekend.